Good evening, Wealth Our Way Nation. What is going on? It is your main man, Charles Tank Harris, the founder and chief visionary officer of the financial literacy platform, Wealth Our Way, where our motto is wealth is not only for the wealthy. I welcome you to another dynamite episode of the Financial Power Hour. But before we get started, I got to practice the attitude of gratitude and say thank you, thank you, thank you to each and every one of you who are here with us as we stream live across the Facebook Wealth Our Way page and the YouTube Wealth Our Way Network page. If you have not, as of yet, subscribed to the Wealth Our Way Network YouTube page, please do so at this time. I also want to give the Wild Nation salute to the many members of Wild Nation who will watch this program in its pre recorded state overnight, on the weekend, wherever they can get their financial literacy fix. And of course, a heartfelt how are you to the great folks on the Life 101 platform who listen to the audio recording of this very here program. I just can't wait for you to meet my wonderful guest tonight and to feel all of the logic and love that she's here to share with us in the field of real estate. But before we do that, we're going to kick off the show. I grew up in West Philly, and times was tough. Single mom, 4 kids, there was never enough. What's a youngin' to do? Join a gang or a crew, or go to school, hit the books, and find a mentor or two. God was on my side, moms was not with the games, so I studied extra hard, created a lane, read books by Warren Buffett and Benjamin Graham, spent time on Wall Street, and now I'm the man. But there's still much to do, and plenty to say, so I present the Power Hour, by Wealth Our Way. Enjoy the show. Yo, so peep this. You know how it is with me and technology, with your boy Charles Tank Harris. It's always an interesting situation. So today our guest has me streaming on her Wind Down Wednesday on Instagram on IG Live, which I love that. So what's up to the Wind Down Wednesday audience and crew and everyone over there, and over here we got her popping on both Facebook and on YouTube. So let's throw the beautiful Devon Caudle up on the screen, and let me just tell you a little bit about this wonderful, wonderful woman. So she is a real estate diva. Real estate John is the proper moniker. And what I love most about Devon is she's touched every area of real estate. So she's been in property management. She has been in real estate sales. She helps investors. She helps people who are trying to be first time home buyers, regular schmegular, as my friends like to say, people who are just out buying houses. There is not one area of real estate in which Devon Caudle is not well versed. So without further ado, let's all meet the lovely Devon Caudle. How are you, Devon? Doing good. I think we need the volume on StreamYard? Wonderful executive producer person, because I see she's muted.
Can you
Okay, there
hear
we
me
go.
now?
Hear you perfectly now. So let's just start with the how is everybody again, because I don't think they heard you.
Hi, everyone. I'm Devon Caudle. Thank you for the introduction. Formerly Dev the Real Estate John. Uh, but yeah, very excited to be here. The double stream, that's new for me too, but we worked it out, it's working.
So so let me ask you this, because I'm getting my producers in my ear and also on the side. I'm sideways on your program. Do I need to turn my phone the
Yeah,
other
it's
way?
fine though. You're good. You
Okay, cool.
are sideways, but everyone can hear you, right? Can you guys hear? Can you hear? Can you see? You are cocked to the side, but I mean,
It works for you. I could try to do it. I know the minute I try to turn that jaw to the side, it's going on the
yeah, just
floor.
let's just leave it how it is. Like
so
it's
so
probably how you have your phone positioned in the tripod, but it's
right.
like leave it.
That's exactly how it is. So that's all good. So anyway, thank you so much for joining me tonight. I understand that you have your own program, so that you had to move some things around, and I appreciate that. I wanted you on the show because it's so much going on in the real estate market currently. We've had a situation where we had a run up in housing prices. And then just when we started to see the cooling of the price run up, we have an interest rate run up. So if as people would say, if it's not one thing, it's another. And I know from the various professionals that I deal with and the friends in the real estate industry and myself as an investment guy, I tell people all the time there's never a bad time to get in. There may be a bad time for your situation, but there's never a bad time. So I wanted to have you on tonight to really reassure the audience and all the good people out here as to where they can make it happen in real estate despite what may be going on economically, so to speak. So, why don't you give the people a slight introduction to all things Devon first?
Sure. Yeah, I love that topic. I think it is a great time to discuss that. Real estate and purchasing it in any capacity, whether it be for your own personal use or for wealth building investment strategy, it all is subjective. It mainly depends on where you are in your life, to me, not so much what's going on in the market. And so I'm glad that you brought this topic up because I definitely want to get into the fact that people forget there's whole other asset classes that do well when one is on the decline and different things of that nature. But just to give your audience here on Instagram and on Facebook a little background about myself. My name is Devon. I am from Philadelphia. I also lived in Florida for a really long time. I'm an HBCU grad. I went to FAMU. I am a full time realtor, entrepreneur. My professional career started when I moved back to Philadelphia in 2015. My first real job was working at the Edge Student Village across the street from Temple. So I got started working in multifamily as well as student housing for an international company all at the same time. So
That's what's
there
up.
were obviously a lot of moving parts. It was tough, but that's how you get your feet wet. You just kind of hit the ground running. So I matriculated through my career from moving from student housing to leasing and managing Class A luxury products, then moving into the commercial realm of real estate. Now I am a full time realtor. I co own a boutique property management firm, and I do a little bit of investing myself. So, like Tink said earlier, I've kind of been in a lot of different pockets when it comes to real estate. So, I think this is a great time to kind of explore some other asset classes that people might not be familiar with in a market like this.
I love it. That's a great introduction. It seems like you are so well versed in every aspect of the real estate that the majority of my audience would be interested in, from a standpoint of residential to commercial, and from a standpoint of investing to sales. So let me ask you this: from a standpoint of undergrad, what led you down the path to turn your attention to real estate?
Well, like I said, I kind of so when I got the job working at the Edge, right? I was working at a fine dining establishment downtown in Philadelphia. I just moved back home. I had to reestablish myself. I hadn't lived in Philadelphia prior to 2015 since like 2008. So 7 years had passed by. So I was working at a restaurant, and one of my regulars, he asked me, he was like, what do you do during the day? And I was like, haha, I look for real jobs. And he offered me a real job. So I kind of fell into it. And then from there, when I started working for Post Brothers in 2017, is when I really, really, my wheels started turning when it came to real estate. I was living on site at one of their properties at a discount. I got paid a base salary, and then I was also incentivized by commission bonuses for leasing apartments. So then I was like, well, if they're able to pay me this at a baseline and incentivize me for renting their properties and let me live on site for a discount, how much are they making? That's kind of when I caught the investment bug, when I started listening to podcasts like Bigger Pockets and Jamila Souffrant's Journey to Launch and things like that, and my wheels really started getting turned as far as real estate as something that I really wanted to dive full first into.
You touched on something that my audience has heard me say before, but you never know who's listening on various days. So I want to kind of revisit it. When I got divorced in 2000, well, I got separated in 2015. The divorce was a couple years later. I moved back to Philly. I still have my hands on a few real estate properties, which you and I are working together now on some of
Yes,
those properties.
yes.
Well, the one thing I love about real estate, and people will know about me, I've never had a real estate license. I've invested. I believe in real estate as an asset class, as a financial planner. I definitely believe in it as a store of value. But the one thing about real estate that I will always toot the horn of is I had to restart my entire life after my separation. I left my quote unquote mansion in Georgia and all of my worldly goods down in Georgia with my ex wife and my children, came back to Philly on the humble. And I could never live in 100 shares of Microsoft stock. I could not live in a Bitcoin. I couldn't even live in a bar of gold, but I could live in my rental property that I had. I just said, you know
Exactly.
what? I'm going to forego getting rent from it, and I'm going to go there while I rebuild my life. I think and my boy Jimmy Williams from Buy the Hood, big shout out to Buy the Hood, Jimmy Williams, and my man Corey, they always talk about the utility of real estate. You're when people are trying to sell you on why real estate's a good idea, they always say, "Well, they're not making any more earth." And you hear the line so much, you just kind of get jaded on it. Yeah, it's a blinding glimpse of the obvious. But until you have to lean on the functionality and the utility of your real estate, you don't really understand how versatile an asset
Yes.
class it is. And there is so much
Yes.
value in that. So when you're saying that you lived on site at your job, so I'm thinking of it from the employer
Yes.
standpoint. They're like, yo, this is a come up. We got our employee is a captive audience for everything we're
Yes.
doing. And if we need some extra work from her, we know where she's at. She's here. So
Yeah.
what are your thoughts on when you're talking to people who may say, I'm just never going to get into real estate. It's too complicated. I don't want to have tenants, all of the negative things. And we'll get into some of the negative things about real estate. What are some of your top selling points, not necessarily to sell a piece of real estate, but to convince someone that they should entertain the asset class?
Yeah, I mean, like that's a great story. I have a similar kind of story. In 2011, I rented an apartment. I rented an apartment in my name. Oh, my headphones are dying, but
Uh,
that's okay. So in 2011, I rented an apartment in my name that me and a partner were living in, right? I could not afford that rent independently. So I was slapped with a big old fat judgment or eviction or whatever you want to call it on my credit. So when I did move, but I was still in school. So, student housing, you're renting by the bed. There's not really credit qualification. So I was fine when I was still in Tallahassee. But when I moved back to Philadelphia, I moved in with family first to get started. But like if it wasn't for me working at Post Brothers, I couldn't have traditionally rented anywhere else, Also, when I was speaking to Nicole about commercial real estate on her podcast, the Better Than Success podcast, we were talking about the fact that when I first got my real estate license in 2019 and I hung my license with the brokerage in 2020, I told them I wanted to be a commercial agent. I was like, I kind of have done the multifamily thing and the single family thing. I'm not really interested in that. I want to work on the commercial side. They kind of were like, not really trying to hear that. So I started just looking at commercial jobs. I was like, I already have experience being a, multifamily um, property manager. Let me try to see if I can get a job as a commercial property manager. And I did. So I was getting paid $70,000 a year to learn how to manage commercial properties, work in tandem with the accountants, the asset manager and everything like that. I was getting paid to learn a whole new skill, so it's just like it's endless. You just have to really think creatively, kind of think outside the box, but the opportunities are endless when it comes to real estate. Everything needs real estate, even Bitcoin. They need a place for people to mine Bitcoins. The stock market. They have real estate. The New York Stock Exchange. Everybody's ringing the bell every morning. It's just endless. You just have to think what your life goals are. Where you are right now, what your needs are, and see a way that you can weave it in there.
I love that. And just we live life in real time. Just so everyone knows, I am over my chief administrative officer's home, and she has two lovely little teeny dogs. And we're in a section where there are deer outside in full force, and the dogs are at war with the deer. So if you hear that back and forth, that's what you're hearing. With that being said, I wanted to touch on, first of all, shout out to Nicole Purvey, Better Than Success.
Yes.
That's my girl.
Yeah.
Everyone who knows me knows that's my people from back in her Vanguard days. She gonna know I'm put her on blast. I've known Nicole since she was 22 years old. So now she's a grown up out here in these streets doing her big time things, and she will be a guest on the Financial Power Hour on our I want to say September 28th show, something like that. Producers will correct me and put it in the chat, but I think not the next show on the 14th, but the next one on the 28th, she'll be here. With that being said, Devon, I love your story. What I love most about the conversations that we had that led me to have a desire to want to work with you is your passion for educating people, your passion for taking people who don't understand all of the options, like you just touched on, that real estate is more than something you can buy and hold, or it's more than something you can buy, renovate, and flip. It's more than something you can buy and put a tenant in. It's all of those things at the same time and even more. So what I would like for you to say and just kind of expound upon is give us a story of proper, and I'm privy because I've followed you on Facebook and Instagram before we actually met in person and started working together. But give us one of your success stories of helping someone, maybe a first time home buyer, someone maybe who decided to get into investments, who had very limited knowledge of real estate, and how your passion for real estate was able to open their eyes to ways that they could get involved.
Sure. Yeah. So, my favorite thing is house hacking. I know a lot of people don't care for it, but you have to kind of put your comfort behind you sometimes to help yourself reach your goals. So, a lot of my first time homebuyer clients, if their children are not of school age, if they are single, oh, now they're saying I can't hear me. They can't hear me at all. Great, love that. You
Are we
guys,
not being heard? Not
it's
being heard on
me.
the IG platform?
Yeah, so I'm probably gonna hop off Instagram, guys. Sorry. Tune in on Facebook. I posted the link on my story earlier. Let me tell
And,
them.
and we're also on the Wealth Our Way Network YouTube page and the Wealth Our Way Facebook page,
Sure.
but also go to the Facebook page that Devon has in her story link.
Well, our wait. Oh, she's saying it's good now. I'm very
Okay.
confused. But anyway, regardless of that. So like you said, when you moved back to Philly in 2015, as did I noticed a lot of changes going on in the city. Philly is still a little rough around the edges, but things are starting to slowly change. Thank God, right? I feel like the city's been undervalued for decades. It's a beautiful thing that's happening right now. So something that I like to do with specific first time home buyers clients that I have is I like to try to push them into what's called house hacking. So there's a couple different ways that you can do it. One is by buying something that is 4 units or smaller. So that means you can buy a duplex, a triplex, or a quad, right? And you can live in a unit and you can have other people live in the other units so that they're paying your full mortgage for you or paying your mortgage and then some each month. Or you can buy a single family home, finish the basement, or fix up one of the back rooms and add a full bath or something like that and have a roommate, right? A third way is you can be a short term rental host. So you can, with this, there's a lot more flexibility. I personally know somebody who bought a single family home in South Philly that had a rooftop deck, and she put like a yurt or a tent or something up there and was Airbnb-ing that, and it was making
Wow.
money. It was selling out
Wow.
like every night. So I really try to push clients who um, do not need to be in the best school districts. There's no reason why, just because you're pre-approved for, let's say, $450,000, that doesn't mean you need to buy something that's at the top of your budget if that's not where your family or your personal needs are right now, right? So I try to push a lot of first time home buyer clients who are younger, who have children who are not of school age or who aren't partnered or things like that. So kind of neighborhood doesn't matter as much, to try to get creative and maybe look at a neighborhood that's a fringe neighborhood or up and coming neighborhood where you can get some appreciation and live with other people and you're next to mass transit, so that you're kind of, then you create this huge snowball effect. So when you go to buy another house in 2 years, 5 years, you're in such a better financial position to do that.
I
So
love
that's
that. So
things to offer to people.
I love that story, and that brings me to a shameless plug of my firstborn princess, big baby Bria, who house hacks, and she actually wrote a book. She sold a bunch of copies of it, the Millennial Black Girl's Guide to House Hacking. And what she has
Good.
done is she has a home that's in West Philly, completely renovated house. I told her, I joked with her when she bought the home. I said, Daddy worked so hard and fought to get out of the streets of West Philly, only to see his firstborn princess
Yes.
with a home in West Philly.
And
but
she was smart for doing
it's a
so.
yeah, it's a different West Philly. Although there have been a couple of times where she's had to lay on the floor
Yeah.
while her neighbors work some things out. But with with that being said, she told me, "Hey, look, Dad, I was at University of Georgia undergrad. I had a roommate. I went to Fordham and lived in New York. Couldn't afford to live alone, so I had a roommate in Harlem, a roommate in Brooklyn. It was nothing for me when I moved to Philadelphia and got my first job to be comfortable with roommates, except for instead of us all writing a check to a stranger, why couldn't everybody write a check to me?"
Yes.
So she bought this home with some help of her rich uncle. By rich uncle, I mean her father. And she bought the home. I think it's a 6 bedroom home, and she rented out 3 of the bedrooms, kept the guest bedroom, and had her own bedroom. All bills, mortgage covered by her roommate's rent. And she was very specific with who she rented to. She would only rent to, and I don't know if I should say this and she'll get brought up on discrimination charges, but she would only rent
No,
to
not when you live
female.
there. Not when
Okay,
you live there.
she would only rent to female graduate students who worked in Philadelphia. So, if they went to Drexel, LaSalle, Temple, Penn, and they had a job like she had a job and went to grad school, she wanted like people. And it was amazing to me because, once again, it's hard, and we'll talk about gentrification in a minute. It's hard when you see a neighborhood that is turned over and you knew it before it turned over to see it in its turned over state. So it was funny to me that she had an Asian roommate, a white roommate, a Middle Eastern roommate, and they did not care that they were, in my words, in the trap. To them, it was just like, nope, it's just a house. Everything is fine. And it's just a bunch of young ladies living in this house. And she has made out so well through this
Yeah.
process.
Yeah. So that's brings up what I was speaking to earlier. When you are we all, especially grad students, students in general, you're on a fixed budget. So like living in a sketchier side of town is not as scary when you're doing it in a group. Instead of living in a bedroom by yourself, everybody can kind of look out for each other. You are not as much of a target when there's 5 people who live in a house versus one person, so and what you were saying earlier, that sometimes things would get a little dicey. She might have to lay on the floor. It's not as traumatic when it's only impacting you and not your children as well. You know what I mean? So there
Right.
are some advantages to it, but it has to be a lifestyle fit. It's not so the other route that I would tell people who they have a different type of lifestyle where you do need to live in a safer neighborhood with better schools and things like that, I would suggest to those clients that they look at buying somewhere where houses are cheaper. So you make your first home an investment property that you don't live in, and then you leverage that rental income, your rent roll, and combine that with your savings and your W 2 and your 401k to go buy a bigger dream house later. There's always a way to get to where you're trying to get.
I love it. And that's what I talk about on our 15 Minutes of Finance program a lot, that there are many ways to build wealth that require human capital, that require you to make some decisions and some choices. So you don't have people to tell me, oh, I don't have enough money to invest in a Roth IRA and buy stocks, bonds, or mutual funds, or I don't have enough money to buy cryptocurrency, or I don't have enough money to buy a house. Well, let's start making money off of ourselves. What can we do? Currently, and I joked about this. People get on my nerves all the time. Just it's my constant friction with the human race. And I made a post this morning, and I see my brother Travis in the audience. Travis commented on a post. It was just about relationships, and I said, fellas, how many times do you wake up on one hand and say I should pour 1,000% of myself into this relationship, and on the other hand and say I should say f this and just go on become a nomad? So I was talking with a client the other day who has a trailer and they
Mm.
trail the countryside and post up wherever they can to live. And I actually have two clients with trailers actually. And I was thinking to myself, could I do that? Like, could I stop paying mortgage and rent, buy a trailer for a one-time expense of 15 to 30,000 bucks, a nice little trailer, put it on the back of the F-150, and never have to pay to live anywhere again? Just literally go from site to site, see an area, find a campsite, post up for the night, and keep it moving. That's probably not a city boy like Big Tank's future, but there are all types of variations for us to put money in our pocket or stop pulling money out of our pocket if we're willing to adjust our lifestyle in some way, shape, or form.
Yes. Yeah,
When
definitely.
one of the questions that come up all the time when I'm talking to people about Philadelphia, because I'm born and raised in Philly, but I actually have two residences now, one in northern Jersey and one outside of Atlanta in Georgia. And the real estate markets couldn't be any different. Like, I'm basically right outside of New York and right outside of Atlanta. It's a night and day comparison. But with that being said, I get a lot of inquiry from people in Georgia in particular about Philadelphia, ironically, because Georgia is a big transplant area. No one who lives in Atlanta seems to have all been born in Atlanta. They ask me, how do I feel about so many of the neighborhoods that were once predominantly black in my childhood now becoming gentrified? More importantly, I think the concern is squeezing out people who can't
Yes.
afford to live there anymore. I know as a Temple alum, shout out to TU, there's been a constant fight for like the last 20 years about Temple building a stadium in North Philly for football. And the number
Yes.
one argument is they're not going to let Temple University displace more of the community that's already been displaced by the growth of Temple. What do you find to be the benefits? Like, make both arguments. Tell people why
Yes.
gentrification is helpful to a city and typical people, and why it can be harmful and hurtful.
Sure. I mean, from right, let's talk about it from the good, I guess, the pros. We'll start with that. Once, so it's a when people hear the word gentrification, they don't know about the groundwork that was laid to get there. So cities have things called RFPs, which are um, requests for proposals for developers, right? Cities and private entities work in tandem together to build the infrastructures that you see. Most Nothing that's not public housing is owned by the city government, but the city government owns the land and the water system and the streets and everything leading to neighborhoods, right? So they have to come together. So the city does things like put out requests for RFPs. They'll be like, oh, well, we'll give you this piece of land or we'll sell you this piece of land at a discount if you can come up with an idea that the city and the zoning board likes. So that's one piece of it. Then there's another piece with the tax incentives because building things from the ground up is expensive. It's very expensive. You have to get architects involved, engineers, you have to get dump trucks, cranes. It's very expensive. So in order to attract people to do these types of things, then you also need to give them tax incentives. So here in Philadelphia, what they've been doing that's been very popular, all the new homes that you're seeing with the gray gentrification, gray siding, and the rooftops and all of this stuff, all of those houses came about because Philadelphia was like, okay, well, if you're building brand new construction and you apply for this thing, we'll give you a 10-year tax abatement, right? So not only is the builder not having to pay taxes, they're transferring that to the new person who buys it. That's attracting people to buy homes again in a certain area because now you don't have to worry about your taxes on your real estate for 10 whole years. So that's great to the new people who are moving in, but what it does to the old people who are still there, unfortunately, is with all this new construction and all this new value coming to their neighborhoods, now their real estate taxes have gone up. Now, we do have programs like the homestead exemption, where if you live in that primary residence, you can file to keep your taxes below a certain amount each year, but they still do raise them a little bit. So then it becomes an issue of people who are disabled, who are on Social Security, SSI, people who are older, who are on fixed incomes that they're living off their pension and their Social Security. It becomes an issue where they can't keep up with how quickly prices are moving up. So that's
Mm.
the good and the bad. Because again, with these requests for bids, a lot of times they'll put in there that you need to have a certain amount of green space, you have a certain amount of parking spots, that you need to bring a grocery store. So we are helping to fill those food deserts where we used to see in a lot of urban areas. And that's great and everything. But again, with things getting better, things tend to get more expensive from like a tax, from a tax standpoint. And so then it kind of pushes people out who aren't able to keep up because they're not able to go get a better job. They're not able to work for whatever reason, whether they're older or they're, have a disability or things like that. So that's some of the negative drawbacks, because I do wholeheartedly believe that some of the things that make a community or a city beautiful is the diversity of its people. And diversity just doesn't come from like what you look like. It doesn't come from black and white. It also comes from economic, people having mixed incomes. That's part of what makes the neighborhood cool. Like New York now is not even giving the same that it used to give. Like when you go to Brooklyn and Harlem now, it's like all the fun, all the zhuzh has been sucked out of it. And so there are, of course, people trying to keep things like that from happening here in Philadelphia. But the problem is the rate of putting in things in place that will keep the bad parts of gentrification from happening aren't happening as fast as the people who see opportunities here and are taking advantage of the tax breaks and the incentives and things like that. So
I
got a
love
lot
that. And I appreciate you picking up on both sides of that argument, because I think oftentimes most of us look at one side of something and can make a very strong case for why this makes sense without paying any homage to someone else's point of view. So I appreciate that. I want to pivot from there as the dogs
Sure.
get angry at a flock of deer walking by. I want to pivot from there to helping my audience understand how to traverse the current landscape that we find ourselves in from a home purchasing standpoint. So I want to first talk about residential real estate, people looking to buy, whether they're first time home buyers, whether they're someone looking to have a expanding family and they need a bigger house, or they're looking to downgrade,
Sure.
downsize, not downgrade. I guess that's the wrong terminology when it comes to real estate. What I would like to talk about is, what do you see? And I know no one has a crystal ball, so we never put anybody on the spot here at Financial Power Hour and have you tell me where rates are going or housing prices are
Right,
going.
right.
But what we have seen is a run up in housing prices. I've educated my audience that there's a couple of reasons why we've seen this run up. One of the major reasons, which isn't getting the publicity that I think it needs to get, are a lot of these hedge funds and private companies buying people's homes for reasons that are, to me, un-American, than raising rents and doing other different things. But we're also seeing, just if you're a current homeowner, your home could be considered to be your biggest investment. I don't like to use that language, but it is what we've said historically. So if
Yeah,
these companies are coming in and running up the price of the house, that's better for you on the long term. But if we're a new buyer and we're running into this hot market, so to speak, how do we find our sweet spot to purchase? And is it still as hot as it once was, where people were putting offers in on Monday and being told on Tuesday 4 offers got in front of them and they can't buy that house anymore?
sure. So I can only speak to my market specifically. Real estate is very, very, very regional. So here in the Philadelphia market, like Philadelphia city limits, although home prices have not dipped yet and interest rates have gone up, there is much less competition. So what that means is all of the money that you're gonna get out of a deal, you need to take care of during the negotiation period. So let me take a step back. So if we have a house that's listed for $300,000, right? Now there is not as much competition on it like before. Now instead of there being 20 showings and 5 offers, and you have to bid over asking and things like that, that stuff is kind of dying down a little bit in the city of Philadelphia. So that's a good thing for you as a home buyer. What that means now is that you can come in at asking or under asking when you're submitting an offer. You just need to make sure that you're submitting a very strong offer, and that comes from working with a very experienced realtor who knows about the current state of the market, right? So I have an example, a friend, two friends of three. I have three people right now. One recently just closed on a home, two are under contract. All of them have gotten what's called seller's assist. So they told so I wrote a strong and compelling offer, and I let the other agent know that, hey, I see this has been sitting for X amount of days. We are going to give the seller exactly what they want, which is, $315,000. But what we're asking for in return is a little bit of help, a little bit of assistance, right? So that comes in the form of a credit at the end of the sale at the closing table. So that can be in mortgage points, in a percent of the home value, or a dollar amount. So if you are someone who has 20,000 in savings, it's going to take you 15,000 to close on this house. You can give what's called a BFI, a buyer's financial information sheet, to show the seller when you're submitting an offer asking for this, like, hey, I'm going to give you exactly what you're asking for. You'll get $300,000, but I got 20,000 in this savings account. Would you offer me 5 or 6,000 in seller's assist? I can guarantee I can close quickly. The mortgage lender is copied on the email. I've already put my application through. We can close in 3 weeks. Like, I'm gonna give you exactly what you're asking for. I'm just asking for a little bit of a kickback in return. If you're about to make $300,000, would you not give somebody who's financially sound and whose lender is involved in the conversation, $5,000 or $6,000 back on the back end to ensure that you have a guaranteed sale? So now we have time to get creative with these types of asks. So seller's assistance is back, being able to use the city government programs like PFHA and KFIT and all of those things. That's back. Being able to use FHA, it's all back now. So even though prices haven't gone down and interest rates have gone up a little bit, it still is a great time to buy, because you might have to put out less of your hard-earned cash. So yes, over time you might be paying more on your mortgage, but you can also refinance whenever rates do drop again. Rates are just like anything else, ebbs and flows. It goes up and down. So when rates get lower again, or your credit improves or things like that, look into, or you pay down a lot of your mortgage, look into refinancing out of your loan to get a better interest rate. So
When you talk about seller's assist, I think, just to expound on that point, so the audience is clear, you are going above. Let's say someone offered the house at 300, you're going to tell them you're going to pay 306 if they give you back 6 at closing,
correct,
so they still net out the
correct,
300, but you come out of pocket less.
correct.
Okay,
Yes.
that makes sense.
And there's also less competition, remember? So this house has probably been sitting 30 plus days. They clearly haven't gotten a concrete offer yet. I'm guaranteeing, by looping in the lender and having these previous conversations with them, that this deal will close, and you're still going to make every single penny you were looking to make. But now on the buyer side, you're coming out of pocket less. So it's like a win-win for everyone.
Love it. When you talk about purchasing real estate from a standpoint of investing, how much different does it look to go into a deal that you're looking to become an investor, as opposed to buying a house? What do the programs change? Do the amount of money out of pocket change? Walk us through that.
So that's a great question. He knows his camera is sideways. Listen to Lorenzo talking about turn your camera. He knows you're late. So there's a couple different ways you could do that. If you want to make your first home purchase be an investment, you can just buy a house, right, with using conventional or FHA financing, live in it a year, move out, rent it out. You can do that model. There's someone who has a blog. I cannot remember her name, but that's her model. Her and her husband buy fixer uppers. They put only 3.5 or 5% down. They live in it the whole year. They fix it up the whole year. At the end of a year, they sell it. They go buy another house and do the same thing. So they're like making money, and also They're not breaking any mortgage laws because they are owner occupying the house for at least a year. But they're only having to come out of pocket a teeny tiny bit. Then there's another investment model, the 1% rule. So that means if I buy a house for $200,000, I need the rent in the area to be at least $2,000. So same thing, you can buy a house in an area that is priced at $200,000. You can live there for a little bit. When you move out, if you rent it for $2,000 at least or more, then you're what people call it's a cash flow positive or whatever. There's a term for it. Can't think of it off the top of my head, but basically you're following the 1% rule. You should Google that. There's a 1% rule for investing. Then there's also like the burn method where you don't have to owner occupy it. You can get a bridge or construction loan from a bank. You can get a hard money loan from a hard money lender. You can get a personal private loan. You can get a personal loan, but that gets a little dicey um, with rules of what you're supposed to be doing with the money. But don't ask, don't tell. Or you can get private money, so you can get money from like hey, I know you have $50,000. Let me borrow it real quick. I will give you a 10% return on your money in 6 months. That type of thing. So with that, there are other margins you want to follow as well when it comes to the math of the deal. But basically, you're buying something for a lower price, adding value to it, then selling or renting it, and then taking that profit and going to do another deal. So there are a lot of different ways. You can do the 1% rule, the burr method. You can live in it yourself and then move out a year later and either keep renters there or go buy something else. There's a ton of different ways, but it's very case by case basis, I would
I love
say.
it. As I'm going to be on my man, the Finance Rebel. So later on tonight, 8:30, everybody, I'm on the Finance Rebel, my boy Kamari Ellis's show, talking about the benefits and some of the drawbacks of life insurance. And I bring Kamari up because he talks about personal finance. His tagline, "Personal finance is personal." So what Devin just said is exactly that. What may work for me may not work for you. And we get so caught up with keeping up with these imaginary Joneses, looking at their life, thinking everything is sweet, thinking it's going the right way. What they're doing may not work for us. And we have to stay focused on our personal financial journey and where it instructs us to go next and how it instructs us to handle our path. I love that. I want to go back to the FHA method, paying the 3.5%, living in the house for the year, and then getting ready to go on to the next project. The reason I want to stay there for a second is I highlighted a person a couple of weeks ago on 15 Minutes of Finance who was doing some illegal things with credit repair for people. Eventually got locked up, sent to jail. Her clients will probably be going to jail, some of them. And
Mhm.
I always want to be very transparent and clear about the difference between using the rules to find the best way for you to do something and breaking the rules. What Devin was quick to point out about this couple is they are using the rules. Now, we know the spirit of the FHA program is we're trying to let lower income people who otherwise couldn't afford a down payment get into a home and stay in it for the rest of their lives. That's what the spirit of it is. But the rule is you got to be in there for a year before you could do anything. As long as you're not trying to be deceptive and you're only there for 6 months and you're pretending you're there for the others, that's breaking the rule. Staying there for the required year and then moving on is nothing illegal about that. It's nothing unethical about that.
Exactly.
Rules are
Exactly.
not meant to be broken, common to the old adage. Rules are meant to be used as best as they can be used. I saw a piece the other day, and I know he's not the favorite of most people who watch my program, but our former president, they said that he buried his ex wife on his golf course, now turning his golf course legally into a cemetery. And there's a litany of tax breaks that owning a cemetery gets you. And people are like, yo, when is this dude going to stop? And I'm like, yo, I think that's brilliant. Like, I call all my ex-girlfriends when they pass away and see if I could get rights to bury them in various places because the IRS code, as people have commonly referred to it as, is the cheat code, and not the cheat code in a negative way with negative connotations, but a cheat code in that if you can understand the tax code and what benefits are there for you. The biggest areas of benefit in the United States tax code are for small business owners and for real estate. And the third area, it doesn't take as much of the tax code up, but it gets one of the best tax breaks in our country, is cash value inside of life insurance, which is what I'm talking about later tonight on Kamari's show. So I take this little segue of this program to highlight to you, I don't care what level of finances you're on. I don't care if you're living check to check making 40 grand or if you made $7.2 million last year. You can be more financially literate. You can be more financially diverse, and you should always be seeking platforms that give you useful and meaningful knowledge on how you can build your net worth. So that's my little in-house commercial. Speaking of in-house commercials, make sure you are following Devon Caudle. Going across the bottom of the screen is her IG, her Twitter, her email. You hear what the young lady is saying. Her, and I'm old, so she may look like young lady to me, young lady. You hear what she's saying? She out here kicking way levels of science and knowledge that we all could use. And then I also want to make sure that you guys take time to subscribe to the Wealth Our Way Network YouTube page if you have not done so at this time. So we're rounding the final home stretch of the program, Dev, and I want to take us down the conversation of what happens to people who have had some rough times in their lives. They want to buy a house, but they file bankruptcy. I filed bankruptcy. They've gotten divorced. So, their assets may not be as plentiful as they used to be. Income may not be high. Talk to us, and once again, you can limit it to your market, about some of the things you are doing to help people, whether they're first-time home buyers or challenged home buyers, get into homes.
Sure. So that I love that because I'm just like I told you guys earlier, I'm a whole property manager and an investor and I've been evicted before. You know what I mean? Like life happens when it does. You know, the beautiful thing about things like evictions, judgments, bankruptcies is time heals all wounds. After about 7 years, none of that stuff matters anymore. So you have to really take the guilt and the shame out of it and really get strategic and practical. You need to be like, okay, I know for a fact that in about I know for a fact that with evictions they fall off in about 7 years because they're like a judgment, a credit, a thing on your credit. And I believe with bankruptcy it's 5, 10
10.
years. There we go. So 10 years, your bankruptcy doesn't matter. So you just need to put your head down and get very strategic and create a 7 to 10 year plan, right? You need to be like, because just because a dream is delayed or deferred doesn't mean it's never gonna come to fruition. So if your dream is to live in a McMansion but you don't got the credit to get a jumbo loan, then you need to figure out, hey, over the next 7 to 10 years, this is what I'm gonna do. I'm going to work on paying off all my other debts. Like, if this one was too large, but it's going to fall off, pay the small ones off. You need to start building your credit back up with secured credit cards and things like that. You need to boost your income streams up. You can also humble yourself and maybe ask for a cosigner, a co-borrower. There are a lot of people who they forget that like you don't have to do everything on your own. Like everything doesn't have to be hard. There are people out there, whether it be a blood relative or a friend or different family members, mentors, things like that, who are willing to help you. Maybe they'll add you as an authorized user on their card, will not give you the card, but will add you on it to help boost your credit back up. There are a lot of things, and you really have to, like I said, I personally think taking the guilt and the shame out of when something bad financially happens to you and relying on people who love and can trust to help you get back to where you're trying to be, that's really really like where the meat and the game changing stuff comes into play, because you can plan because you're down, right? So you need a little help. So in addition to reading and listening to podcasts and educating yourself, you also probably want to start asking for help, because there are little simple things that won't hurt other people that will help you get there faster, like the secured credit card thing.
That's amazing. And I feel compelled to tell a story. One of the blessings that I've experienced throughout the course of my life is being on every level financially to the top where I'm at. There's a whole bunch of topper levels that I haven't gotten to yet. But going from, I always say, from food stamps to black card, I've been poor. I've had an American Express Centurion card. I've done it all in between. And one of the things that I realized when I was younger, and we were on food stamps and Medicaid, and I needed a Pell Grant to go to college, and I had government cheese at the crib, and my mom was on WIC with the Kick cereal and the peanut butter. One of the things I realized is that we made fun of each other in the hood about that. Like that was one of our best jokes. Like, oh, you're so poor, or you're so poor. Even though we're all poor, we're making these jokes about being poor, Medicaid, and this, and you're on the welfare. What I have learned now as a more financially successful person is that higher income, higher net worth people, they can't wait to get welfare. They can't wait to get Medicaid. I sat in a trust seminar once and listened to a trust attorney tell a story about her client who was, I want to say he was a neurologist, a neurosurgeon. And this man had several offices. He made over $4.7 million a year. And he went skiing and ran into a pole, tree or whatever, and was completely permanently disabled. He had set up so many trusts, pooled income trust, asset trust, irrevocable life insurance trust, that he actually owned nothing. He subscribed to an acronym that I used to use back when I worked with professional athletes called ONCE, ONCE, own nothing, control everything. This man's assets were all in trust to the point that when he got injured, he had long-term disability insurance to cover the vast majority of his income, and then he had Medicaid take care of him. The private nurses coming in, facilities, the top doctors. He was airlifted somewhere, all on the government, and he made sure that happened because when Medicaid comes to help us, if we have assets, they'll do a 5 year look back on any assets that you have, and they want you to deplete all of your assets before they will help you. If you're above a certain income threshold, you can't even get the help. This man made sure, going from 4.7 million to making himself appear poor on paper to get public assistance. They're not joking about this. So it's a
Yeah,
mindset thing. Like Devin says, you got to humble yourself. I think we
yeah,
spend too much time waiting to get our first Louis bag and Gucci belt instead of realizing that this financial life is just that. It's far reaching, it's more mental than anything else. You have to believe you can be the success that you think you can be, and then you pursue how to bring that success to reality. I want to answer a question from the audience before we start to wrap up because we're already less than 10 minutes to go. The conversation goes quick. Tashawana asked you, Devin, has the housing market or is the housing market turning from a seller's market to a buyer's market?
yes. So, what we were talking about earlier about how last year and during COVID, the sellers had all of the power. Prices were going up, but interest rates were staying down. So that means there's a lot of people trying to buy. And it's also a great time to sell because prices are going up. So now we're kind of shifting a little bit. Right now, it's like right here, everybody's kind of on an equal playing field. And I feel like it's going to shift a little bit more to the buyer side soon, where people are going to have to lower the prices. Right now, people are not having to lower the prices of the home, but the buyers can ask for more repairs, more assistance, more time to close if they need to gather more of their funds and things like that. So it is shifting towards a buyer's market right now. I would say we're in like kind of like a fair and equal market. Because things are still selling. They're not sitting for 6 months or anything like that. Inventory is still low on new construction and homes that are turnkey and move-in ready. So we're definitely starting to feel a shift though. Now is if you're a buyer who needs time or assistance or repairs done or something like that, now is your time. Don't be cheap though. Still give the people what they want. Still, try to give the seller as much money, as they're asking on the listing price. But yeah, it's starting to get more equal, where it's more of like a equal transaction where sellers aren't just being greedy and being like, no repairs, you have to bring cash, you got to, all that wild stuff that was happening a year or two ago. And also, what Tank said earlier about like Medicaid and government assistance, stuff like that, is called assistance for a reason. It doesn't mean that you're not capable of doing it on your own. It just means you need a little help. The man was literally paralyzed. Like, I don't think, like, yeah, he didn't have to pay for any of his medical care out of pocket, but he lost his ability to do a lot of stuff. You know what I mean? He needs assistance. You do. That's literally what it's called. Or women who, they were in relationships. Now they're left with all these kids. They need assistance. They didn't make those kids by themselves. I think we definitely need to stop demonizing other people for when life happens. And we also need to extend a little, grace and take a little shame out of things.
I definitely agree with that. I think that nothing helps you understand other people's situation and helps you become more empathetic than going through your own trials and tribulations. And when, it was funny, I filed bankruptcy as I was moving away from my first marriage. And I had no shame to it at all because I understood finances and I knew it was a tool that I could utilize. I had an attorney, actually had a team of attorneys, and this was the best case scenario we came up with. But the bankruptcy was just on paper. Like I didn't care about the bankruptcy. I literally was broke. That was more troubling to me. I went from having a bunch of money to having no money.
Right.
And I I think that was one of the best periods of my life. Like, everybody would say, "Oh, Tank, you should write a book and just share stories." I've had so much money and those done so many things that people are quote unquote envious of. But the best time of my life was when I moved back to Philly and I found out who really cared about me.
Yeah.
When I didn't have anything and cats that I had spent money on taking to Vegas with me, gone to
Yeah.
islands with me, they were like, "Dude, you good? You need something?" Or, if I said my car was messed up, all of a sudden I got, some bread sent to me to take care of a thing. I'll never forget that. And
Yeah.
what it allowed me to do is I don't think twice about helping people. I never have. Even when I was up, I never thought about it. But now, after having gone down a down time, knowing that you can come back from it and that all you need is a little nudge or help from a friend or a government entity. I think that you used the proper word, like giving each other grace and not being so hypocritical and judgmental of other people is really what we need to focus on and be more human.
Yeah.
Because if we're not going to be more human, then we're going to make an experience that's bad for those around us. But more importantly, we're going to make a bad experience for ourselves.
Yeah. Well,
So, what I want to say is thank you, thank you, thank you, thank you for joining us tonight. You have definitely graced the stage in a way that has not been graced before. We appreciate. I love the Africa motherland earrings too. Don't see it. Don't think I don't see them. I see them. Is that a butterfly or is that the motherland?
no, it is. Yeah, it's the
Okay.
outline of Africa.
There it
Yeah.
is. That's what I thought. I thought I want to play
Yeah.
myself and be like, "Oh no, these are butterfly wings, Tank." But yeah, nah, they're dope. I love them, and I just wanted to say you're a friend of the program now. We will always welcome you back here,
Yeah, thanks
and
for
just
having me.
give us a parting shot. Tell me something that you want the wild audience to know about Devon moving forward.
Um, I would like them to know that this is definitely not your last time seeing me. Tank and I have some stuff we're working on in the background, that some exciting stuff. And also just to you know, it's Wednesday. Let's take a breather. Let's relax. I know you still have some work to do, but I'm gonna take a little break after this.
Grab the wine.
It's hump day. It's a short week with the holiday. Let's enjoy ourselves. Let's get some rest and let's get this money.
Let's get this money. And if my good people back in the studio could take us away now, I'd appreciate it. We'll see you guys on 15 Minutes of Finance tomorrow. Peace.